good morning, good people, wherever you are in the world. Good morning, good afternoon, depends the time and where you are in the world. All right, today I want to talk about market structure and how you can identify the movement is will happen or the market direction and where market goes to. So and how you can spot or how I do spot some beautiful and good entry. I will explain for you today. Just stay tuned, please. Thank you. So, all right, let me go to my bonds. So, we had sharp move down. So, what do you expect? Correction wave. This was a sharp wave down. So, what do you expect? Correction wave. Okay, what do you get here? So, this is sharp wave we was expecting. If a sharp wave down happen, we have to expect corrective wave. If impulsive wave happen, we have to expect corrective wave down. Okay, there's a wave we're expecting with this arrow. Okay, and the corrective wave must be shorter than previous wave impulsive wave. Okay, down or up. It depends where market goes to. So this is still downtrend. It's still downtrend until it broke that bigger structure. As you can see here, in the same formation we had an impulsive move, correction wave, small, impulsive move again, correction wave, small. We had again impulsive move up. Now we are getting correction wave. This is where everyone watching. This is where everyone watching. Okay, correction wave is here from, from here to here. So this will be the support. This will be support. You can see too much rejection. Rejection is there. With that support, if and we get the strong bearish engulfing too much, if the price break maybe go here, we can see still uptrend. But when the market click and reverse there, we can see still sellers want to take down. So we might look this button, W formation button or head and shoulder button. So with that said, we can take nice sell from here to at least previous support, to at least previous support, to at least previous support. You guys with me? With good risk ratio, and we're actually going to benefit. You guys with me? That's how to spot. Well, I think the price might still go down and find new support, break this Fibonacci level, then extension level. From the extension level, we might see another impulse. So we might see another impulse up, but the only way an AUD USD can go double bottom if the price break this and this level and hit this level, we might have a strong sharp move down and create double bottom. Hey guys with me? So this is going to be good corrective structure. Then we can have another impulsive move wave down. Hey guys with me guys? So that's how to spot market structure, how to understand market structure, so and how to spot the real opportunities guys. With any time frames you can do it, but try to get the overall where you going to from a bigger time frames and flow with the small time frames and try to adapt to 1 to 3 base because you can't watch all the base because you cannot get mixed up. So you have to also know how to read the market candlestick patterns. What I mean candlestick patterns, with this candlestick patterns we see trap buy and we see small candle. So this is called dark cloth cover. Dark cloth cover is a signal for strong weakness. So when this candle finish, a strong candle up and the other one is short 50-50. So that is called in what I call dark cloth cover. What do you see next day? Strong bearish. The strong bearish will took still. So after retest, we might have down move. After retest the level top, we might have a strong sharp move. So, but that's how to spot the how to spot and how to spot and real opportunity, guys. So you can also use a Felicia band to find out where market goes to, but indicators are lagging. Don't use indicators, they're not good, but they tell you where the market is. So upper band tell you is resistance, lower band tell you resist support. So you can actually know when impulse is going to finish, almost going to be finished. So this is a real impulse. So we actually need, this was beautiful impulse down. So the impulse is almost going to be finished. How are we going to know the market still going back, going down? Because now we see so far bearish engulfing, bullish engulfing is starting, bullish engulfing is starting. Buyers pulled in, buyers pulled in, buyers pulled in. But when move down, we might have a strong rally up to double top, to double top. Then we might have strong rally down. So blue chip band also explain for you the deviation between resistance and support. And when market want to reverse, so you can understand that from band, but don't use for indicators and signals, but use for deviation between buyers and sellers. And almost in when almost in what I call when almost price want to reversal. So from here, don't try to sell. Look for only buy entry, and market will go. You see, we get a sharp wave down. So with this sharp wave down, as you can see here, we are in H1. We are in H1, guys. We are in H1. So market actually broke this level. So what we expect the market to retest this level and market to give us another nice push down. So when the market reached here, then we may have another. Let me take in horizontal line because market want to come back to near all-time high and give us double top before we get moved down. So we may have another push up to retest the neckline, the information on neckline. Then we can have push down hard, or we can have from there push down up. So we don't know what can happen, but we have to follow the market rules. And now what we see here, impulse, small short correction, small again, then we can look for possible nice buy opportunity from here. We can we can look for possible nice opportunity if market reaches this level and straight come back. We can observe this level is one of these levels. We can observe one of these levels here, or this level here, actually these levels here. Then we can look for strong, nice, good buy opportunity from here. That's how, because we had an impulse here, it's the same. You have to get correction. And what I say, correction must be shorter than previous impulse. So what we see here, same correction. You see, so what we get next? Impulse, and that impulse must be bigger than previous impulse. Must go on the top of that impulse. Is that clear, guys? I think it's clear. All you need to get is to respect market structure, and when the market do this, and going back here, here is your buy entry. Here is your buy entry. Boom. So when market does that, buy from there, boom, you're in profit. But try to weigh the market and to give you right entry. If you change the market or if you force the market to give you entry, then you will be in trouble. You will be in trouble. You will be in trouble. What I mean in trouble, you will lose like I used to do. Today I make money, tomorrow I lose. Today I make money, tomorrow I lose. So I see what's going on, what's going on, what's going on. And when I send my coach, he say, what happened in the future will happen. What happened in the past will happen in the future. Ah, what he mean that? Ah, but he didn't explain so clear like this man. But I read a lot of books, here wave books, too much books. Then I finally find out the whole game secret and the MW formation and how they move extension happen. You need to understand it, guys. With this sharp wave, expect sharp wave up, but don't buy and sell. Stay away. Well, we know the market because when the news come up, the market can kill you. Let me say, but if you get in from here and news come up, you don't care. The market will come back, still you are safe. But you get in here, let me see, you get in here. News release come up. The market will kill you and still shoot up. So the best way is to wait at the top and the best way is to wait at the bottom. So when it's time to complete, get in. Every bay will give you nice tree setup every week. Nice tree setup every bay will give you and wait for the good setup is don't force the market. Wait till the market change phases to from bearish to bullish. Let me say what I mean by that. Many people say market must change its face. I always say market must change face from bearish to bullish. People say how that's going to happen. You have to able how to read the candlestick patterns. You have to have knowledge on how to read the candlestick patterns. So now what we see here so far, bullish engulfing coming in. Market changing faces. We also see low before breakout happen. What this tell us, market want to change the direction, but should the market change so? No, you have to wait. Here you can scalp sell, still we get the bullish engulfing, still going down. Market still going down. Market still going down. Pirates trying, pirates trying, pirates trying, pirates trying, pirates trying, pirates trying, but it's still going down. Find a good extension level, then or what we call a Fibonacci extension golden level. I think it's 23 level. Then the market will shoot up. Same wave because market goes to zigzag. This is sharp wave. When you see sharp wave, expect zigzag wave. Zigzag. What I mean zigzag? W wave. Market going down, retreat, extension. Then final leg, stop loss hunting leg. Then what's going to happen? Market will come back to you to this level. What do you see from there? Retesting, and you will see good wedge pattern, failing wedge pattern, strong breakout. Then flow you are in safe. That time you are in safe. Catch that move down. Catch that move. If a news come out, you don't care. If a news come out, can kill you. You don't need to look for news. You don't need to look for investing.com and what news Trump is speaking. Stay away from the market. That's all rubbish. All you need is to understand the wave patterns and market strategy, where market goes to, where it goes to. You need to understand that. You need to understand that. You need to understand that. If you want to make money in forex, you need to understand market patterns. The beautiful button is which button. The beautiful button is which button. The second button is zigzag family button. This using trend line, using trend line doesn't work. Breakout happen. also you need to read, and you need to know how to read Fibonacci extension stuff levels and why the market. So the most important thing is to understand the wave theory. The wave theory is impulsive move happen. You have to expect correction wave. Correction wave happen, and the correction wave must be shorter than impulsive wave. And second, what do you expect? The third one, you have to expect what I call another impulsive move, and that impulsive move must be longer than previous impulsive move. Is that clear, guys? There's no secret, guys. So what I say, AUD USD want to go to double top in daily time frame. Are you guys are you seeing what I say daily time frame? In H1, we get enough information the market want to go create double top or new high, then shoot down all time low. As market want to go to all time low, market want to go all time low. In order to go there, we need liquidity. Actually, from there to here. So actually, in order to market to go down, market need liquidity. So this strategy must be completed double top around this area. Then we will see double bottom. Then we will adapt the new market structure. So will happen in the future. This was how many days? 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day, 9 day, 10, 20, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33. It's 1 month and 3 days. 1 month and 3 days. So what we get in monthly, we are still in bearish. Monthly, you see here, last month is finished already, right? So what we see, bullish engulfing monthly. So actually, market is still going up, but looking for liquidity. Market must come down at the end of this. Market must come down at the beginning of here. Then market will go back. It might take month, it might take few days. We don't know. We don't know how market will go, but that's where the market goes to. So what we see here, bullish market. This whole month buyers was controlling. Now retracement, retracement. We see this impulsive correction, impulsive again. Maybe below here. Maybe it will be below here. Then it can be we might have a bearish month, and from there we might have a bullish month. We don't know. We don't know what can happen, but that's how to read the market structure from daily time frame to an H4 time frame. All same, all same, all same, guys, all same. So what happened here? So what I call wedge patterns. This is what I call wedge patterns here. I can respect this wedge pattern. The previous level. I can want to will turn back here. Maybe will turn back here. I can need to come back here, find a strong level, and that will be another impulse up, or it might be, we don't know, it might be if the market come back here and still have a bearish phase, we can we can look for a small going up or double top there, or we can have an what do you call here, then hidden shoulder also here, possible to go lower. We don't know what's gonna happen, but we have to adapt always new market structure, and we have to always wait at the end of waves. That's a better entry. Inside, if the zigzag wave, if the zigzag happen, then we can adapt this and look for this entry. You understand what I mean, guys? That's number one. And we can wait. We can, if the market come here, then we can look for buy. If the market change the bearish market to change to bullish market. Always we follow what the market will give us because we expect retest. Retest what? Retest to M structure. Here is M structure or retest of to give us the W formation around here or to give us W formation around here. So guys, there's no magic here. There's no big things here. All you need is to understand the market structure and follow the market structure from at the top and at the bottom. I hope you understand what I'm saying. Every day you're going to do same way, same way. Let me do other way. What do we see here? We see impulsive down, impulsive wave down. What we expect correction wave. Correction start impulsive again. Okay, impulse correction. What do you get? Impulse. What I say impulse must be on top of the previous impulse. Correction. What do you get again? Impulse, small impulse. On the top of that, then we are getting now correction. So where is the relevant meeting points? It is a strong support. So from there, the question is, should NZD going down or should NZD going up back? We don't know. So overall, we are and we get impulsive down. So and a correction for daily time frame. So what we expect is still here. We have to observe here. You have to observe and new market structure for W formation. Here you can take small buy, short buy to that. When short buy hit the take your profit. And again, if the market change phase to bearish, then impulsive move down. That's going to be W formation. So to where to this new support. Are you guys with me? That there's no secret in trading. All you need to understand is to understand the market structure, market behavior. So this is going to be a W formation. So from there, we might have, if the market come back here, we might have an when the market back here, then it still is going to be W formation again. W formation going to start over again. Then with the W formation start again, then we can look for possible buy opportunity to all-time high. Are you guys with me? Are you guys with me? That's how to read the market structure. From daily time frame, H1 time frame, every time frame dash. Every time frame dash. And the market go to the channel. All you need to understand the channel and how the channel go. So wait at the top of the channel and at the bottom of the channel. That's the best way to get best entry with a good risk to reward and increase your potential profit from forex market. Forex market is high risk business and high probability business and high risk and high reward business. But as long as you know what you're doing, you can make a lot of money. And as long as you don't know what you're doing, you can lose all your money. So the best thing is to now is to learn what's working, then respect what's working, and the money will be with you. That's a thing I am 100% sure, and I test it and see it myself. And I see it myself. So all you need is to learn impulse correction, impulse correction, impulse correction, impulse correction, impulse. All those guys making tons of money, like thousands of money every day, and making millions every day. They only respect what the market gives, and they wait long. And you want to wake up every morning and want to make money from forex market, but you can't wait real entry. It's really the only thing day traders why the 90% of people lose because they don't want to wait the market. They want to force the market to give us money, to give money like I used to do. Are you guys with me? Don't force the market. Weigh the accurate entry at the top or the bottom. Inside buttons. Follow the buttons. If you don't know the buttons, which buttons or zigzag button, there's a lot of buttons. With a strong breakout, then you can trade with that. I hope you understand what I'm saying. Let me finish with this and load into my YouTube channel. If you like my video, please subscribe my channel and share, like, click subscribe button, like and share with your friends. Then every week I will I will do an market analysis for free in the channel, and I will also post educational video every single week. Then that's only way you can become and you will understand how I take the price action and how I identify my spots and where I get my entry. Let me finish, guys. Let me finish. I'm out.